Canadian dollar at C$1.2717, or 78.63 US cents. Loonie touches its weakest since April 9 at C$1.2718. Canada's inflation rate edges up to 2.3 PCT in March. Bond prices mixed across steeper yield curve. By Fergal Smith Toronto, April 20. Reuters, the Canadian dollar weakened to an 11-day low against its U.S. counterpart on Friday after data showed domestic inflation rose less than expected, with the currency extending its decline since the Bank of Canada held interest rates steady 2 days ago. Canada's annual inflation rate in March edged up to 2.3% from 2.2% in February, the highest level in more than 3 years, Statistics Canada said. Still, it was less than the 2.4% forecast by analysts, while the Bank of Canada's three measures of core inflation were little changed. The markets are a little bit disappointed because the numbers are softer than anticipated, said Derek Holt, head of capital economics at Scotiabank. But to me, it still keeps May in play for the Bank of Canada. The central bank left its benchmark interest rate on hold at 1.25% on Wednesday and said it did not know when or how aggressive it would need to be to keep inflation in check. Chances of an interest rate hike in May were little changed at 35% after the data, the overnight index swaps market showed. In separate data, Canadian retail sales grew by 0.4% in February as higher sales at auto dealerships and general merchandise stores outweighed widespread weakness in other sectors, Statistics Canada said. Analysts had expected a 0.3% gain. At 9:24 a.m. Eastern Daylight Saving Time, 13:24 GMT, the Canadian dollar was trading 0.4% lower at C$1.2717 to the greenback, or 78.63 US. The currency touched its weakest level since April 9 at C$1.2718. The price of oil, one of Canada's major exports, fell on Friday after U.S. President Donald Trump criticized the Organization of the Petroleum Exporting Countries and said oil prices were artificially high. U.S. crude prices were down 0.4% at $68.03 a barrel. Canadian government bond prices were mixed across a steeper yield curve, with the 2-year up 3.4 Canadian cents to yield 1.921% and the 10-year falling 5 Canadian cents to yield 2.327%. The gap between Canada's 2-year yield and its U.S. counterpart widened by 2.2 basis points to a spread of minus 52.0 basis points. Reporting by Fergal Smith, editing by David Gregorio, Our Standards. The Thomson Reuters Trust Principles.